Yo, what's up YouTube? It's your boy K. I'm back again with another video. But before I start with today's video, I have an announcement to make, guys. Okay, so I posted a link down in the description below, guys. Okay, so if you click on the link, it's gonna refer you to this page right here. Okay, so the reason I posted the link down in the description below is so that you guys can actually sign up using my link. There are benefits when you do this. What you need to do is click on the link, sign up with the broker I use, which is Axness, open a real account with them and start trading. Okay, when you do that, I get to give you a lifetime mentorship program for free. Okay, because it would be my responsibility to actually start making you a consistent and profitable trader. Okay guys, so what you need to do is click on the link, sign up and open a real account with them, and then after you do that, you can just comment with your email address in the comments section below, okay, so that I can get your email. And then after that, what I'm gonna do is I'm gonna send you a message in your email with my details, okay, and then that's when we're gonna start talking about the package I will be providing for you after you do this. Okay guys, so thank you, cheers. On today's video, we will be talking about mass psychology and trading. Okay, so you guys know the drill. Please read along with me so that you guys can grasp the information I'm about to share with you guys. Okay, so it reads here: mass psychology in trading. Here's one thing about price action: it represents collective human behavior or mass psychology. All human beings have evolved to respond to certain situations in certain ways, and you can see this in trading as well. The way a multitude of traders think and react forms patterns. Repetitive price patterns that one can see and then predict with a certain degree of accuracy where the market will most likely go once that particular pattern is formed. For example, if you see a major resistance level, price hits the level and forms a shooting star, a bearish reversal candlestick pattern. You can then say with a greater degree of confidence that price is going to head down. Why is that? Because there are so many traders watching that resistance level, and they all know that price has been rejected from this level on the previous 1 or 2 occasions, and that tells them that it is a resistance level, and that they can also see that bearish reversal candlestick formation. Guess what they will be waiting to do. Okay, point number 1 says they will be waiting with their sell orders, not just one sell order but thousands of them, some small and some big orders. Point number 2 says, but on the other side of the coin is that there are traders that have bought at a low price, and now that the price is heading up to the resistance level, that's where most of their take profit levels are. So once they take their profits around resistance levels, that means there are now less buyers and more sellers. The balance tips in the direction of the sellers, and that's how the price is pushed back down from a resistance level. Because price action is a representation of mass psychology, the markets are moved by the activities of traders. So price action is about understanding the psychology of the market, using those patterns and making a profit as a result. So just to summarize the topic we're talking about here, okay? So mass psychology basically is collective human behavior, okay guys? So the way we act as a collective is mass psychology, okay? And mass psychology is the reason why the market moves the way it moves, guys. Okay, we have an example here that says as a trader, if you see you have a major resistance level and then price hits the level and forms a shooting star, which is a bearish reversal candlestick pattern, you can say with a greater degree of confidence that price is going to head down. Why are you saying that? It's because as traders, we are all watching that resistance level, and we all know that price has rejected from this level on the previous 1 or 2 occasions, and that tells us that it is the resistance level, and that we can also see a bearish reversal candlestick formation. Okay, so as traders, what do we do when we see this? The first point here says we will be waiting with sell orders, okay, not just one but thousands of them, because there are thousands of traders in the market. Okay guys, some with small orders and some with big orders. Okay, and point number 2 says on the other side of the coin is that there are traders that bought at a low price. Okay, so these are the buyers that actually drove price from the previous support level price would have moved from, all the way to the resistance level that price is trading at now. Okay, and what do they do when this happens? So they pushed price all the way from a support level to a resistance level. Obviously on a resistance level, that's where most of them are gonna take their profits. Okay guys, so once they take their profits around those resistance levels, that means that there are now less buyers and more sellers coming into the market. Okay, so if you can look at it, it's just like an exchange in trading. Okay guys, so when it's a chance for the sellers to enter the market, the buyers take their profits and leave the market for the sellers to actually push the prices down. Okay, to push prices down, excuse me. Obviously it's vice versa when the sellers are in the market and then giving space to the buyers at a support level. Okay, so this is just how everything works. It's like a cycle, guys. Okay, so it's more about balance, guys. Okay, so every time price sells and moves in a downtrend, price is going to go all the way down looking for a low price where buyers would actually want to start entering the market and pushing prices up again. This happens when prices anticipate a support level. Okay, it all depends on whether the level is strong or not. Okay, and always remember that it's about the major trend as well. Okay, so what happens on your major time frames is important, guys, because that's where you see who has the upper hand. Okay guys, so that's how mass psychology is. Okay, so it says here, price action is a representation of mass psychology. The markets are moved by the activities of traders. Okay, like I just said. Okay, so how traders act and how traders actually drive prices is because of mass psychology. Okay, it's a representation of mass psychology, guys. Okay, this is important because this is how the market moves. Okay, these are market dynamics, guys. You need to understand that there is a time for the sellers to actually take charge of the price, and there's a time for the buyers to actually take charge of the price, and there's a time where both of them agree to a fair price. Okay, that's when prices are in a consolidation, so there's an equilibrium in price. Okay, so that's it for this topic, guys. I hope you guys liked this video, and I hope you guys learned a lot from this. Please take this into consideration, guys. Mass psychology is important. If you can give yourself a chance to actually learn how this works and the theory behind it, then I promise you in no time you will understand the market fully, and you will be able to take advantage of the movement you see happening in the market, because at this stage you would be understanding why they happen the way they do and what the outcome is most of the time. Okay guys, so thank you so much, and please don't forget to subscribe to my channel for more content, guys. Thank you. Cheers.